There are concerns that if the industrial production index breaks down and fall, the stock market will also decline. Nice to meet you, dear viewers of the Elder YouTube channel. This is stock investment expert Byung-Hyun. The stock market has been on the rise and fall recently, continuing its uneasy rise. Recently, even though the data came out well, such as Nvidia performance rising, it was heavily adjusted for not meeting expectations. I think the reaction in the stock market is indicative of investor sentiment that is unstable. Let's check the stock market indirectly through the real market in the stock market showing this uneasy trend. Industrial Production Index. Industrial Production Index is an economic indicator that helps determine the intensity and direction of economic activity by quantifying actual production in major industrial sectors such as factories and utilities. The fact that economic indicators are rising rather than falling since the declaration of the tariff war is interpreted as a move to stockpile inventory before the tariff policy take effect. This appears to be a strategy by companies to mitigate the impact of the tariff by securing products in advance of the tariff-induced price increase. However, despite this effort, once the tariff takes effect, companies will adopt two strategies: either pass on the increased prices to consumer or absorb the increased prices themselves, reducing their operating profits. If the increased prices are passed on to consumer, the consumer sentiment index and retail sales index will likely decline along with the rising prices. In the short term, the stock market will rise, leading to rising bond yield due to inflation. However, the current 4.5% long-term bond yield will be difficult for the stock market to sustain. As the economy declines, corporate performance will likely deteriorate, leading to lower bond yields. If companies reduce their operating profits, this will lead to worsening profitability and a worsening consensus, which will in turn lead to a decline in stock prices or polls, since this directly impacts companies' corporate value. Prominent companies like Walmart have already expressed concern about their performance due to tariffs. Therefore, I believe either approach is unfavorable for the stock market. The chart you see now depicts the relationship between the U.S. Industrial Production Index and the S&P 500. The orange line represents the U.S. Industrial Production Index, and the blue line represents the S&P 500. The relationship between the Industrial Production Index and the S&P 500 is proportional. When the Industrial Production Index declines, the S&P 500 falls, and when the Industrial Production Index rises, the S&P 500 rises. In 2000, the S&P 500 fell due to a decline in industrial production indicators, and in 2008, the S&P 500 also fell due to decline in industrial production index. In 2020, the S&P 500 also fell due to a decline in industrial production index. Currently, the industrial production index are no longer rising and are moving sideways. There are concerns that if the industrial production index breaks down and fall, the stock market will also decline. Capacity utilization rate. The capacity utilization rate indicator measures the operating rate of factories related to the manufacturing industry. Currently, the service sector accounts for more than half of the US economy, significantly diminish the importance of manufacturing. However, manufacturing accounts for most good, high-paying jobs, and even in the service sector, sales in the service sector are not independent of manufacturing. They are significantly affected by the economic performance of the manufacturing sector. Therefore, the capacity utilization rate economic indicator can be used to gauge the real economy and can be used to forecast the stock and bond market. The chart you are looking at now is a chart of the relationship between capacity utilization rate and the S&P 500. The blue line represents the S&P 500 and orange line represents capacity utilization rate. Generally, when capacity utilization rate rise, the stock market tends to rise. And when the capacity utilization rate fall, the stock market also tends to fall. In 2001, the stock market declined as capacity utilization rate declined. In 2008, the stock market also declined as capacity utilization rate declined. In 2020, the stock market also declined as capacity utilization rate declined. Currently, capacity utilization rates are declining, and based on past data, the stock market is expected to decline as well. It seems necessary to prepare for any potential stock market fluctuations. Furthermore, if the stock market corrects and declines during this period, I believe it would be a good idea to increase your exposure to stocks with strong fundamental and future prospects to increase your expected return. I will discuss stock at the end of the month. Today, I shared my personal view on the stock market and bond market based on the US Industrial Production Index and capacity utilization rate. This is my personal opinion, so there is high possibility that it's incorrect. Please leave your comments and I will humbly accept and review them.